Welcome to today's video. If you're new to Forex or looking to strengthen your understanding of the market, you're in the right place. Over the next few minutes, we'll cover the basics of Forex trading, explaining the key terms, and showing you how the market works. Let's get started. First things first. Forex stands for the foreign exchange market, which operates globally from Monday to Friday and spans across different time zones, meaning trading is available throughout the entire work week. Forex is where currencies from all over the world are traded. Currencies are always traded in pairs, such as USD-CAD, where USD is the base currency and CAD is the counter currency. The base currency is the first currency in the pair, and it is what you are buying or selling against the second currency, which was the counter currency. Now, when one of the two components of a currency pair is USD, the pair is considered a major currency pair. If the pair doesn't include USD, it is known as a minor or cross-currency pair. These pairs are the building blocks of the entire Forex market. Next, let's dive into some of the key terms you need to know to trade Forex. A buy order means you are purchasing the base currency, hoping its value will rise. A sell order, on the other hand, means you are selling the base currency in an anticipation of a price drop. When you close a trade, that is called closing the position, which means you are exiting the entire trade. Now, when you are ready to start trading, you will need a broker. Brokers act as intermediaries who execute your trades on your behalf. Choosing the right broker is crucial for your success, so make sure to do thorough research. For example, if a broker isn't regulated by well-known entities, trading is likely to be a risky venture and you could end up losing your funds. Brokers should also have a large variety of different tools and tradable items at your disposal when trading. To start out, you will want to open a demo account. This account allows you to practice trading with virtual money in real market conditions. It is a great way to learn without risking real funds. And once you're comfortable, you can move to a live or real account. In Forex, you will often hear the term pip. A pip is the smallest unit of movement in currency pairs. For example, if Euro USD moves from 1.2356 to 57, that is a 1 pip change. A lot, on the other hand, refers to the amount of currency being traded. A standard lot represents 100,000 units of the base currency, and smaller trades known as micro lots represent 1,000 units. The spread is the difference between the buying price and selling price of a currency pair, and it is how brokers make money. Another term to know is swap, which is a fee related to the interest rate difference between two currencies. It is not to be confused with the broker's fee. Finally, let's talk about leverage. Leverage allows you to trade a larger position than your account balance by borrowing money from the broker. For example, with a leverage ratio of 1 to 1000, you can control a position 1000 times larger than your actual investment. While leverage can increase your profits, it also increases the potential for losses. So use it wisely and do thorough research. So there you have it. A quick introduction to the basics of Forex trading. In future videos, we will dive deeper into strategies and tips for successful trading. If you have any questions or want to learn more, drop a comment below. Don't forget to like and subscribe for more content. See you in the next video.